Good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, January 31st, 2022. Well, the market continued to move higher today, and that would be on the back of continued interest in Apple and a hedge fund moving in to start buying Tesla. So many participants of the component stocks of the NASDAQ were much higher today. And a lot of it was being dragged higher because, again, we had a plus 400 point update. In fact, it was probably plus 500 at one point. That is a tremendous rally considering that we had Friday and then yesterday during Globex, and today the market has moved up 1,000 points. That's pretty impressive. Now, along with everybody else, again, begin to feel like, okay, is the market telling us the correction for right now is over, that the intermediate fourth wave is in, and they're now blasting higher? Because it's pretty much exactly what I would expect once the larger intermediate fourth wave would be complete. So I've had to go back and look at my count as is. Now, I can still put the minute 4 here, but if I have to put the minute 5 here, it is over a 100 point. Actually, this is 13,706. This is 138 points failure. In other words, the minute fifth wave failed to take out the low of minute 3, and therefore ended in a failure. Is it possible? Yes, it is possible. Is it what I would be expecting? Not necessarily. And I'll tell you why. We had this low at 44. Then on Friday during Globex, we had an additional low at 31. So there's a 13-point difference. And this would be very hard to count as 5 waves down. So it doesn't fit, but it may have to. And again, Elliott would always write and talk about that when the analyst has really got the back up against the wall in terms of what is taking place in the market, according to an Elliott count, that sometimes the most obvious would likely have to be accepted. And that would be that this is a failure. We have a 1, a 2, and we're into a third wave going up. Now, what continues to work in favor of the decline picking up again, putting in that fifth wave, is that this is a 3, this is a 3, and this is a 5. And it is coming in at levels that, you know, this would be wave A, but I'm now just kind of looking for some Fibonacci extensions for what is happening here. So if this is 1, 2, and this is a 3, then we've exceeded all expectations. So that one I will take off. That I'm going to rule out. So this is the process that I go through. I talked about in last night's update, if it broke that 200, get out of the way. We got it. And what's happened? The 20 crossed it. We got more. The 8 crossed it. We got more. The 50's angling higher. This is not a market that's getting ready to turn and start heading lower. Not to say that it can't happen, but I have to start to look at the possibility that that intermediate fourth wave, which I've been looking to complete, and then begin an intermediate fifth wave, could have failed. Or I have to back it up and go to here and call this the end of the fifth, in a minute fifth wave and the intermediate fourth wave. But my problem with that is that this does not work in any way, shape, or form as a blast off for the start of an intermediate fifth wave advance. This can, but this, no. It just doesn't fit. So I continue to look at this as a minute fourth wave. And we're going to be coming down in a minute fifth wave. Now, so what does that mean from here? Because they continue to hold this higher. Yes, Globex is starting lower. We see that the S&P is down almost 12, the Dow is dropped 72, and the NASDAQ is now down 37. So it's come down and rested right here at 14,857, which was where the previous fourth wave finished. Again, Elliott guidelines tell us that the fourth wave, in a fourth wave corrective phase, it will most often find its terminus or its endpoint at the fourth wave of one lesser degree. That's right here. This is minute, this is subminute. So it now has reached that level. It exceeded it. It actually got itself above 14,900, got up to 915, and then has dropped back. If this continues to go and starts breaking below these moving averages, then I'm going to leave the 4 right there and start looking for this fifth wave down. And it should be pretty quick and pretty strong, because it's going to have to just knock the breath out of all of this buying. It's going to have to knock the socks out of Apple, out of Tesla, out of Amazon, going up 112 points today. Amazon reports, now we still have these reports coming out. We have Amazon on Thursday. We have Advanced Micro tomorrow. We have AMAT mid-month. We have Facebook on Wednesday. We have Google tomorrow. So we still have some Titan companies, some big companies to report. Google only rose 39 points today. Interesting, maybe as to what they might be expecting that company to come in as a report. Google in the past has impressed me because it has continued to report 61 to 62 billion dollars in profit on a quarterly basis. That, in my book, is just like, wow. Now, if they come out and do that, and maybe they only make 50 billion dollars, I'm still like, what an impressive quarter, but maybe the market is looking for 70. I don't know. And again, Elliott wave does not tell us anything about the fundamentals. It is a pure technical tool, and we're looking at the market as measured by human emotional responses. So the bullishness that's coming in is, I believe, and I've talked to other traders, and you get a lot of people, well, it's like, well, I don't know if I should be getting in, but I'm kind of fear, I'm a little bit afraid that I'm missing it. I'm missing out on it. And it's like, that's an emotion. And that could be also propelling us higher. We have this massive return to Tesla. There's so much going on that all gets calculated into the price here. And that could continue. Now, again, what's going to cause the turn? What's going to cause it to start to drop? At this point, I don't know. But what we can look forward to, if the market continues to rise, we do have that resistance right here at 14,857, and it's kind of hovering right around there. Now, next up would be 15,128. That's 62%. That's a 62% retracement of a third wave. Not common. Possible, but not common. What do we have right above that? We have the don't break zone, and that's at 15,152. That gets broken, then this all gets readjusted, and it probably will show up right there as a failure, if not here. I'm not sure what all this is, but I may even have to put it here as a failure, that the fifth wave failed, and then all gets marked here, and we're off to the races. So that could be 4, and this crazy 3 wave gets marked down as a fifth wave failure. We're going to let the market tell us, but here's the deal. Breakdown, it'll start to break below the 4, it'll break the 8, it'll break the 20. Then we'll start to get some acceleration in here. The fact that between 14,777, there's $35, it could drop pretty quickly right down to it. A break there could create a very sticky situation because we have the 200, again, 14,566. It remains basically flat, starting to edge a little bit higher, but basically flat. If it gets broken, I'm looking for it to come straight down to that 14,455, which is where the 50 moving average is sitting. Support 14,585, 14,416, 411 actually, I believe. Come on, tell me what it is. Yeah, 14,400 to 411, 14,250, and then we break into this black hole. And if it's a fifth wave, I'm definitely still looking for it to break below there. That would be the downside. Upside, we have resistance at 15,128. We have a no break line at, or do not break line at 15,152. Now, unless we've got a bunch of hedge funds and a bunch of algorithms that are in tune to Elliott wave and know that, it's just a line, it's just a level that would invalidate the current picture and point to the failure and point to a rally then continuing. And all of this comes down and we start putting up new resistance levels and targets. It would strongly suggest that the NASDAQ has bottomed in the intermediate fourth wave, has started that intermediate fifth wave rally, which ultimately would take it to new highs above 16,768. So that is the name of that tune. Now, fortunately, the volatility still remains the same. The volatility in the future is coming just on the strength of these moves. They're not choppy. They move. That's volatile. We've got the pressure coming in that produces that quick volatility that just pushes the market up and keeps it in a trend. That trend was up today. So again, it was a great trading day and it was profitable. Now, I want to just continue to add, unless you're a swing trader and you don't work with stops, you could have made good money today. As day traders, I am not married to the upside. I'm not married to the downside. I continue to trade what's in front of me and the price action. And accordingly, as it started to break and continue to break, so above that resistance right there, and the 20 and the 200, it got a sincere, strong push. And that push took us above 14,600 and kept it alive and drove it eventually to the next resistance level, which was 14,857. It popped through there in a closing push where all enough funds and we got all that end of quarter stuff or whatever, and everybody piling, not end of quarter, end of month, piling in. And that drove us above 14,900. This pullback, maybe nothing other than just a little pullback. So I'm going to blow this up. So, oh, come on, please. Oh, yeah, hold on. Let me get this back in line. Such a pain, but that's my computer and it's also the mouse. So I apologize. I want to open this up so we can see all of these moving averages and see how they are. Look at this. Up, 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 up. They're not turning yet. The 200, the last bastion to go above would be the 50 breaking above that 200. And that spells upside, period. End of statement. So please don't get married to anything. I know I'm talking about a downside scenario, but I'm including the upside. Play with what is in front of you. trade according to. Let the market tell us what's up and where we're going to go. These were impressive opening rallies. That first one, they tried to sell it. Then they bought it. Then they tried to sell it again. And you can tell by the bar, it didn't work. So the trend was actually set before 10 o'clock. And it just kind of went from there. Got a little bit of a hold position right here, a little bit of a downside move right there. And then it picked up. We did see them try to sell it off in that last hour. And that basically was between 3 and 3:30. And then between 3:30 and 4, boom, buyers were back, get out of the way. So catch this price action, pay attention. It is very profitable to trade with than try to trade against. And I know there's a lot of emotional stuff that goes on when we're trading. Are you going to continue to buy it? If you're not getting any indications that they're stopping and you're still seeing via these indicators, right? The tick, which is the broader market, the tick index, the NASDAQ, the tick RL is the Russell. If you're seeing large buyers coming in, that's the number of issues that are being pushed through on the buy side. If it's green, that's buyers. And it can go up over 1,000 in the broader market. It can get up pretty high in the Russell. In the NASDAQ, there's only 102 component stocks, so that's all you get. But if you're starting to see 85, I've seen 85, I've seen 90 in the NASDAQ are being pushed all at the same time. It's going to go. It's going to go. Remember, let's look at that pecking order. Apple sits at the top. Apple has been active and front and center since Thursday's report of earnings, and that was Thursday afternoon. Friday all day, it was front and center. And the gig was that it would it break above and get above 170, or would it drop below and get below 160? That was the range. It showed us at the end of the day what it was going to do. And then they let us know today, what we're going for now is 175 to 177. So we can't decide for the market where it's going to go. We can only trade along with them. And we're not yet getting stronger signals that we're done and we're going to drop. That could come very quickly, can come overnight. Again, we have a lot of geopolitical action going on around the globe. We still are dealing with COVID. We still have a lot of other factors that could put pressure on the market. And on top of all that, we maybe have gotten a 2-month break from the threat of an interest rate rise, but it's out there and they are going to do it. So here we have all this bullishness re-entering the marketplace against what kind of can happen in reality. That doesn't mean it's going to stop, but there's enough in there that could turn it that we need to be able to pay attention and catch any turns that are sudden and deep. Okay, I'm going to leave it there. The next update is going to be on Tuesday, February 1st.